What's going on, guys? Welcome back to my YouTube channel, and in this video we're gonna talk about how to properly read a price chart, because there's a lot of advanced traders that are watching my videos and they already get the idea how to trade, but there are also a lot of new traders and a lot of beginners who take a look at a chart for the very first time, and this is what you would see today. And as you can see, to untrained eye, this is a clear naked chart, no indicators, no technical tools, anything like that, and it can be very hard trying to identify when to go long, when to go short, when to buy and what to do. Market like this, it's fairly hard to read, so this is why I want to make this video to help you guys make it a little bit simpler how I read the price chart every day. I'm going to start going through the process in my mind, what I was doing today when I was trading. And so first thing I like to do, I like to use the indicator that is called 21 bar EMA. So you just plot the EMA, you make it 21 bars, and I use this indicator as to tell me what the trend is, if it's uptrend or downtrend, to see how the prices are reacting to it, if it's a trading range. And also the EMA keeps pulling prices closer to it. Every time you get far away from EMA, you see prices are trying to get to the EMA every single time. So this is just a supportive indicator, and this is EMA is one of the key entry points. Every time I'm expecting a bounce, for prices to make a bounce, it is either Trendline or EMA. So EMA is one of my key entry points. Other key entry points that I'm looking for at the charts to take the trades, that's what the key entry points are. The key entry point just means that there are specific locations on the chart where there is a higher probability that the trade is going to be more successful. And key entry points are trend lines, EMA, and support and resistance lines. So as I came in today, I saw this downtrend a little bit. And if you see like this, you can see that there's some geometric pattern that prices are forming. You can see the EMA is pointing lower. You can see each high is lower than the previous one. You're making lower highs, you're making lower lows. So this is a downtrend. But I wanna, even though I know this is a downtrend, I still want to see where are most likely going to be the best setups. So what I did is I drew approximately a trend line, something like this. And you're going to be tweaking the trend lines, make them fit throughout the day. That's no problem. You don't have to be perfect. You just have to be close. And what I did, I just copied it and pasted it to the lows, and you can see it fits off the lows nicely. You can probably make it fit even more cleanly, but I like it like this. And you can see now prices are swinging up and down, up and down. And you can see trend line is acting as a support and as a resistance lines. They're just slanted. They're just tilted, slanted support and resistance lines. And why am I using these trend lines? Because there's a rule in price action that not everybody knows, that after a break of a trend line, there's most likely going to be a retest of a new extreme. And that goes for the bigger channels, the main channels throughout the day, and for the shorter term ones. So not only my job as a day trader throughout the day is to find the bigger trend lines, to identify the larger trend, I'm also using the trend lines to help me identify the shorter term trends, because they are just as important. And remember what I said a few seconds ago, after break of a trend line, there's most likely going to be a retest of a new extreme. And this is a very important information that I'm looking for, because every time I'm taking the trade, this is the information that I keep in the back of my mind. Okay, so now that you see that we are making a lower highs, lower lows, we are in this downtrend, and we are identifying key entry points, I cannot just take any trade that I want. I want to take the highest possible chance, highest possible win rate trade that is possible, the trade that has the largest chance to win. And what I'm using is the pattern called second entries, because market moves in twos. You can see there's a lot of two-legged pullbacks throughout the entire chart. There's a lot of second entries, and it just goes back to human psychology. It works in our real life, and it translates into trading as well. So what I'm doing, I'm using the combination key entry points with the second entries, and of course overall market context. So as the prices bounce here lower from this lower trend channel line, I'm naturally expecting for prices to get to the key entry point, higher trend channel line right here. And you can see what I did. I drew the short-term trend line just as I'm looking for the trend line. So I drew the short-term trend line, and I have a break and a new high. At this point on, this bullish uptrend has played out. This bullish uptrend, according to price action rules, is over, because after a break there's most likely going to be a new high, which happened right here, and that's all we had for this correction. Now this is the new low right here. We have a first entry short, we triggered below this bar, we traded up higher, it failed, and a second entry short happened right here. Now why this is not a good trade to take? Because we're still looking for a new high of this uptrend working up higher. First entry short, second entry short, we have to let this correction play out, break, and a new high. And you can see at this point on, 1, 2, 3, 4 touches of the trend line, and we have a break and a new high. This is a key entry point, nice bearish bar, we are in a downtrend, and I'm looking for prices to get to the lower side as well. So this was the first trade according to price action rules, and hopefully you guys can identify it. And then as you can see, prices traded out lower, and now we bounce off once again from the lower side of the trend channel line. We have a new low right here, first entry short, pull back, second entry short. But why I didn't mark this setup, why this is not a good setup? Well, it's because not only we are not close enough to the key entry point, that is the trend line, we are not even close enough to the EMA. So this was the reason why you have to wait and why you cannot go short into very low of the day. Notice how close you are to this low of the day. Yes, we are in a downtrend, we are making lower highs and lower lows, but you are way far away from EMA. You need a deeper correction. You are still way too close, and then you just keep going lower and lower, and lo and behold, we have a new low right here, and you can see the trend is starting to see fairly strong right now. We have a first entry short, pull back, second entry short. Now, why? It is at the key entry point, so this is good, it is at the EMA, but why this is not a good setup even if this is the second entry? Just like the case here, we have the short-term trend line working up higher, we need to wait for a break and a new high. From this point on, with the new high made, this bullish correction has played out, and we can now go safely short. We can sell the market, and you can see nice reversal, bearish bar, but still, it would be preferable to wait for prices to get to the upper trend channel line, but this is such a good enough setup. You can see EMA is holding prices each time, then there is no arguing that the EMA is going to hold these prices. And you can see that the move wasn't really that big. We should have went much lower, we should have made it to the lower trend channel line, but you can see prices found support right here, and this is the case where you had to start being leery, because we should have made it much lower right here, but we just only made it to this double bottom, and we instantly reverse from here. Once again, to this triple bottom now, and we instantly reverse from here. This is how you can see that the trend is wavering, it's starting to lose momentum, and you have to quit selling the market. Even this trade is fairly iffy. This trade is much safer. This is a little bit more risky, but still, we have a break, new high, EMA is holding prices, and a nice bearish bar in a downtrend. But the fact that we bounced right here and we didn't make it lower, you know, this is an indication that there is some bullish support happening. And you can see we broke prices higher, we broke the trend line, but this is not enough reason for us to go long. Just because we break the trend line doesn't mean the price is going to reverse. Remember what I said, after break of a trend line is the trend line rule, there's most likely going to be a retest of a new extreme. And you can see we have a one bullish leg up correction, second bullish leg up. We have a new low right here, first entry short, we trigger one tick lower below this bar, pull back, second entry short, but still we are inside of this channel right here, so we have to let it play it out, break, and a new high. And we have a potentially a short right here, because we are waiting. At this point on, this bullish correction has played out with the break and a new high, and we are finally waiting to make a new low of this bigger trend working down lower. And you can see at this point on, you can see that there is some resistance starting to form here. And this is what I was starting to eyeball when I was trading live this day, that you can see there are some matching highs here. We confirmed right here, and you can see the next few lows, they're confirming prices as well. And this is the big indication, this is the green light for trades that happen right here, because once we made a little correction here, we bounced from here, but we found resistance again at the same key entry point. This is why, according to price action, this is a safe place to enter. And now notice you have a double top right here, and you can count this both ways. You can have a first entry long, pull back, second entry long that failed, which in this case it would have been losing trade, and that's okay, that will happen. Not everything is going to work. You can see it, you would have gotten stopped out just by one single take, and it reversed exactly where you thought it was gonna go. So we have first entry long, pullback, second entry long. And this is a second entry long, but we're not looking for second entry longs because we are in a downtrend and we are waiting for a new low. So we are looking for failed second entry longs because we want to go short. So at this point, in this particular case, you would have gotten stopped out, and you had another chance to re-enter because this is a trap. They trapped a little bit more bulls. We closed below the EMA, and there's a big stim at the end of this bar. And what that means that at the very close of this bar, a lot of people started selling. This is exactly what we want to see, and we are still looking for a new low of this bigger downtrend broken lower. So that's exactly what happened. And from this point on, once we have a new low right here, after prices make a break and a new low, new extreme, there's going to be some sort of correction or possibly full-blown reversal. So from this point on, you should be really more leery, not going short, because you have a new low right here, first entry short, second entry short. Even though this is a second entry short, we already have a break and a new low, and we are still inside of this uptrend. So this is a no trade, even though it is a second entry short. So you just have to let this one go without you. And the same thing happened here. First entry short, second entry short. It is at the EMA, but it is very low, close to very low of the day. You already made big enough move for people to start buying again. So this is why you have to skip it again, because we already have a break and a new high. You can see how the trend is starting to waver a little bit, and we are starting to reverse. And the first sign reversal is happening right here. Once the prices are rallying up through EMA, EMA is not putting almost any resistance. Big green bullish bars working up higher. You have a new high right here. This is just the first entry, so you just have to ignore this. This is a new high right here. You have a first entry long, pullback, second entry long, but this is a horrible signal bar. This is a bearish bar. So when we are going long, we are looking for bullish signal bar. So even though this is a two-legged pullback to the key entry point, to the EMA, and it's a second entry long, you cannot go long above this bearish bar. This is the safer entry to go long above this. It has a little bit bullish tend to it. So this is much safer. Bullish bar, two-legged pullback to the EMA, second entry long. And important thing is we try to make a new low. We have this one leg down, pullback, attempt to make a new low. We didn't make it, but it's okay because there's an EMA and we are looking to make a new high of this uptrend. So we have a break and a new high. So once again, the Trendline rules has played out here perfectly, just like throughout the entire market. With this bullish rally up that happened, just for a quick moment, we have a break and a new high. So from this point on, once again, the same story goes all over again. You're just sticking to Trendline rules and you're just trying to find second entries or failed second entries. And we have a new high right here. And from this point on, with the break and a new high, we are supposed to be looking for some sort of shorts. We have a new high right here, pullback. First entry long, that failed, and that's okay because this is a first entry. Pullback, we go through the EMA. This is exactly what we want to see. We go through the EMA, second entry long, but now we are way too low below the EMA. We already have a break and a new high, and this is now a failed second entry long. This is exactly what we're looking for because we're trying to go short. It is inside of this trend line, and it is a nice bearish bar. And in this particular case, if you come from this low, first entry short, pullback, second entry short, you get a little bit lower high from this high, still below the EMA, still inside of the trend line, key entry point. Good place to re-enter right here. And perfect, once again, to the T, price action rules. We have a break and a new low. So what does that mean? Yes, once again, the prices may go into correction or we are possibly going to reverse. So the same story goes all over again. You draw the trend line from the low, so you can see how it fits nicely. Prices are working up higher. You have a newer high right here. First entry long, pullback, second entry long, we have a break and a new low. So this bearish correction has played out. We have a break and a new low, second entry long, nice bullish big bar. And once again, you even get a higher low, higher low from this bar. So this is how the market can get much more easier to read. And hopefully you guys are getting a grasp that you have to draw these trend lines and you have to find the key levels. And if you draw the trend lines, you can see how trading can become much more simpler. And you can see if you just keep looking for the highest probability setup, if you just look for second entries or failed second entry longs, the trading can become so much easier and you can really avoid a lot of losers. So I'm just gonna zoom out a little bit so you guys can see a bigger picture, and this is how it looks if you use price action rules, if you use the rules that I teach you. And this is how it looks without any chart reading skills. Without the EMA, without the trend lines, nobody can really make sense of this. This is so chaotic that nobody can really tell you where to go long, where to go short, if you don't use the price action rules, if you don't draw the trend line, if you don't use the EMA as a supportive indicator. So hopefully this video was helpful to you guys, and see you guys in the next video.